We are going to take a break, but when we return, we will be joined by Sunil Singhania, the founder of... We're not going to be taking a break. We're going straight ahead to Sunil Singhania, the founder of Abacus Asset Management, and Atul Suri, the CEO of Marathon Trends Portfolio Management Service, with us. Gentlemen, thanks very much for spending your Sunday evening with us as we wait for the Prime Minister and the Council of Ministers to be sworn in. Sunil, to you first. What's the expectation? The markets have already recouped the losses that we saw and the kind of whiplash and volatility that we've been through last week. But from here on, come Monday, stability, is that the expectation?
No, I think, thanks for having me. Said after the initial concern which we saw on the day of the election results, I think the markets have taken it in its stride and markets already expecting stability. So I think from here on, obviously the immediate, I would say, things to watch out for is the cabinet ministry, who's going to get the all-important finance minister from an equity market perspective. And I'm very sure the moment we have that, I think the rhetorics are all going to shift towards what is going to happen in the budget. But for now, it is very clear, and the markets are already discounting that we are headed for 5 years of stability. And as the Prime Minister said, that it's going to be business as usual, and he'll work with more gusto towards ensuring that we move towards a developed India or a Viksit Bharat, the way he had already envisaged.
Well, that is right. The suspense continues as far as portfolio allocation is concerned. Sunil, we're hoping that later tonight we should have clarity on who gets what. But on your screens there, Kumaramangalam Birla, Mukesh Ambani, N. Chandrasekharan, many corporate leaders in attendance for the swearing-in ceremony. I think I can see Sunil Munjal as well there. So plenty of corporates in attendance as well. But Atul Suri, what are the charts telling you after the crazy volatility that we've seen? What do the charts say?
Yeah, Shireen, it's been a wild week. The markets last Monday after exit polls do a 3% up, lifetime high, then swing almost 8-9% down, and everything recovered and closed at lifetime highs. So I personally think that the problem was the exit polls. The way the exit polls spoke about 400 par and the gap up that happened on Monday is really what set up what happened on Tuesday. But the important part is that post the numbers coming out, post settling and post understanding, the market has actually steadily had 3 good up days. So for me personally, I think it's a continuation of the trend. We've been part of almost a year-old bull market, actually started in April, more than a year old. And I think it's continuation. This was a very big event. It's out of the way. Maybe a little lower than what market expected, but continuation all the same. And that, I think, is very, very important. Things may change. Priorities may change a little bit on the social side. But as far as the markets go, as far as the whole, thrust to industrialization, liberalization, the thrust to the next, decade or the Amrit Kal, whatever, you find that the push would continue. And I think the markets would reward it. And apart from just India, Shireen, the important part is that even globally, things are pretty good. They're shaping up. The ECB has cut rates. So all in all, we are in a good environment. I do think that we would continue the up move. Yes, there must be a little shuffling around in the sectors and themes that may happen. But then after such a big an event, a little bit of rotation goes for the par.
Yes, some sectoral rotation likely to happen. But Sunil, I want to come back to you and address the issue of fund flows. We were just looking at the NSE retail data. Retail was a net seller on the 3rd, which was a Monday. And when the market zoomed and FIs bought heavily on the 4th, this is my colleague Anu just put the numbers together. On the 4th, when the markets crashed, retail was actually a net buyer, buying worth 21,000 crores as both FIs and mutual funds sold. What do you see as far as flows are concerned, Sunil, from here on, both domestic and foreign?
I think the smartest investors have been the retail Indian investors over the last 3-4 years. And for a change, retail investors in India are making wealth out of the growth of India, which is a great sign. However, I think what has happened, obviously, as Atul mentioned, that Monday, actually just changed the complete perspective, and you had like a crazy move up. And maybe, what has happened over the week is a culmination of the disappointment of Tuesday. What we are seeing is that there has been a healthy sort of I would say, lightening of positions, even on the trading side. Investors who are waiting for some kind of a fall are still waiting because they did not get an opportunity to come in again. And I think two sectors which are not performing, the consumption and the IT, have also got some kind of a boost. And I think that is also contributing to the index being where it is. Our interaction with, particularly we deal with HNIs and large family offices, I think all of them are looking at deploying additional sums of money into the market. I think they are all very confident, as are we, that over the next 5-7 years, we will start to see a very transformative kind of growth, because the first 5-year term of Mr. Modi went into cleaning the system. The second 5-year term, 2 years went into COVID, and it's only in the last 2.5 years that we have started to see a lot of focus on transformative stuff like Make in India and indigenization and so on and so forth. We are very confident that the third 5-year term would be a very transformative term in terms of GDP numbers actually coming out much better than what we are expecting. Already, we saw the March quarter numbers of 8.2% as far as the GDP is concerned. And I think that is very clearly reflected even in the stance of the foreign investors. Very sure they are also looking at opportunities to come in, which we already have started to see towards the end of last week. And that trend should also continue.
Well, Prime Minister-elect Narendra Modi there at Rashtrapati Bhavan, taking his seat right next to Rajnath Singh and Amit Shah. The swearing-in ceremony will start in a few moments from now. The Prime Minister being greeted there by the MPs that will be sworn in along with him. This will be the third term for Prime Minister Narendra Modi. As I pointed out, in just a couple of minutes from now is when he will be sworn in. But Atul, you were talking about sectoral rotation. If you look at what the technicals are telling you at this point in time, where do you believe we're going to see money move out of, and where do you see it moving into?
Shireen, it's just a few days, but what I get from a very early sense is that there is a sense that there is going to be much more rural push. And that's why you'll find that certain sectors that did very well in the last 2 or 3 days. First is autos. Autos really stand out because I think personally that sector was up 6 to 7%, if I'm not mistaken, for the week that went by. And there also you'll find that those auto stocks which have a rural bias did very well. A lot of them touched lifetime highs, even in this falling market. The second area that did very well was the whole consumption, the FMCG space. Again, a sector that's been a bit on the quieter side for the last few months, but there is a feel that rural consumption would spike up. IT, again, the third sector that's done well. And what would come under question is the runaway in some of the defense and railway stocks. Again, I don't think the trend is over. The trend is very large. But yes, certain excessive happened, certain overbought positions were there. So I do feel that a certain amount of money would swing between sectors. The rural scene, the rural push, which people expect this government to have, would, I feel, see a bit of an upsurge as far as Indian markets go. But in all, I think it's going to be continuation. I feel the bigger trend is still up. I still think there's a lot of opportunity and money to be made. At time to time, little swings happen due to certain events. But to sum it up, it's going to be continuation, but with a softer touch.
Continuation with a softer touch. But Sunil, back to some of the themes that Atul was just talking about, and we've seen that FMCG trade play out over the last few days. The expectation is that there will perhaps be a little bit of an emphasized prioritization as far as the rural economy is concerned, and that could bode well for consumption and specifically for FMCG. And of course, the worry is that, look, we've already seen a significant run up in defense and railway stocks, so perhaps a little bit of a slowing down there. What are the themes that you believe you're going to be focused on?
I think you're exactly right, Shireen. Some of the themes which look good, like railways, defense, capex, are already priced in. So, they might be great themes, but they might not be great investments. At the same time, some of the themes which are not looking good, like IT, have suddenly made a comeback. from our perspective, I think private sector banks look very, very good. We are very positive on the wealth and the asset management business because ultimately it's all about wealth creation. And at some point of time, obviously some of these themes that you mentioned, which are capex related, which are, economy related, are going to do well. At this point of time, frankly, our stance is to have a diversified portfolio.
As well being sworn in tonight, Parikshit.
Yes.